again, Stephen Burke from the WSBDC, coming to talk to us in regards to SBA programs and the updates, and talking a little bit about small business cash flow forecasting. We really appreciate you coming and speaking with us. Before we get started, the program is Stephen will talk to us about a half an hour, and then that will leave us some time for some Q&A. So, Stephen, I'm going to go ahead and give you the realm of this call.
Sounds good. Thanks, Amy. I'm not going to be on video because I've got to be able to see my screen. So as I move through this, so let me get through the PowerPoint. And then we'll get to any questions that are still there on at the end.
Okay.
So we're going to cover today the SBA programs update as best information as I have, and cash flow forecasting. As an introduction, as Amy said, my name is Steve Burke. I'm the Western Regional Manager for the Washington Small Business Development Centers. The WSBDC is a group created by Congress 40 years ago, and the SBDCs exist nationwide in every state and most territories, and were created as a state-federal partnership in that connected to an institution of higher education, originally land-grant college, and for Washington, that is Washington State University, so I'm an employee of WSU. And then we've got management oversight from the federal funding perspective from the Small Business Administration. And those are the rules under which we work. And we provide typically one-on-one individual advising to small business owners. So that's who we are. What I'm going to cover today is update on the information that we have. I have to preface it by saying that we are not the final authority on these things. I'll give you references to places where you can go to get that. But one of those certainly is the Small Business Administration updates at sba.gov. And then there's also going to be some reference to Washington unemployment because there's a federal portion that applies to that. So let me get started. Today we're going to cover the EIDL loan, which is the Economic Injury and Disaster Loan, as well as the Paycheck Protection Program loan. There is a debt relief program for those who already have SBA-backed loans. I'll cover that in a minute. Then I'm going to go into the importance of cash flow forecasting, and I'll also have a discussion for relief for sole proprietors and independent contractors, as we know it at this point in time. As of last week, all new EIDL and PP loan applications were stopped due to a lack of federal appropriations. As I'm covering this material right now here on Thursday afternoon, April 23rd, legislation is pending right this minute in Congress to add additional funding. And what I'm seeing at this point in the language is that they intend to add $322 billion to the PPP program, $60 billion to the EIDL loan application program, $75 billion for hospitals, and another $25 billion for coronavirus testing. And this will be, I believe, the fourth or fifth stimulus package coming out from Congress. And it's going to be able to re-energize particularly the two SBA loan programs that we're talking about, the EIDL and the PPP. You should know that the EIDL applications were so numerous that the SBA processing actually took 3 to 5 weeks, which was something that we were predicting in the very beginning. Those who first applied did begin receiving funds on Friday, April 10th, and we're almost 2 weeks into that now, and so a lot of those people have been. But by the time that the applications were stopped due to a lack of appropriation, they had, as of last Friday, a week ago, on the 17th, had processed 600,000 EIDL applications nationwide out of 3 million that had been applications that had been applied for. So That is more than 10 times the number of loans that the SBA processed in any 14-day period in their history. So they've been moving through them as quickly as they can. Those that were actually in motion by the time that the appropriation commitment stopped were still being funded here even this week. The same is true with the PPP bank processing, but unlike the EIDL, the commercial banks are the ones that have been processing the PPP applications. It was pretty slow in terms of their ability to handle the huge volume that they had, but on April 13th, that was a Monday, we began receiving notice that those had been continued to be, or were starting to be funded, and that they've been continuing to be funded since then for any of those that had actually had been received an SBA reservation ID number relative to their loan processing. We'll cover what you should do in a minute for those of you that still want to check in on where those are. When applications open up, and I'm really referring to the EIDL program, but the message is the same for the PPP. When these applications open up again, if you have not already applied and know that you're in the queue, you need to apply quickly. This is a really good funding effort again by Congress, but you need to know that those funds are going to run out. It took about 3 weeks for the first set of funds to the commitment, the appropriation level to run dry, and we anticipate that this next one's going to be 2 weeks or even less. To apply for the EIDL, if you haven't already, here's the code, or the link. I'll be providing this PowerPoint to Amy following this, be able to send it to her, and she can share it with anybody who was involved in this webinar. If you want to check on, you've already applied and you want to check on your EIDL application, this is the 800 number specifically set aside for EIDLs. What you want to do is ask for Tier 2 customer service. We have had a lot of success with people getting real information on their loan application for the EIDL loan. By calling this 800 number, you get to a Tier 1 person who does not have the ability to look into your particular account. If you do get through to them on Tier 1, ask for Tier 2. Usually you get somebody immediately, and we've had several test runs at this. They're hesitant at first, but if you get to the Tier 2 person, they can give you specific information. On these EIDL loans, the term is either 15 or 30 years, depending upon your ability to repay the loan and how much it is. The interest rate is 3.75% for for-profits and 2.75% for nonprofits, but you have a 1-year period where there are no loan payments due, unless, of course, you want to make them. There is something called the EIDL Advance, which I'm going to cover with you in a minute. As we've said, the processing time for these is 3 to 5 weeks. It's just a huge volume for them to get through. And I believe that when they open these up again, that there's going to be additional people applying, which will further increase the number and further delay. And one of the things that's causing some delay is that these loans are unsecured if the loans are up to $25,000. But they're going to ask for collateral, which means I have to go through something called a UCC, or a Uniform Commercial Code filing, for any loans, EIDL loans over $25,000. And keep in mind, unlike the PPP, all of these EIDL loans are actually being processed by the Small Business Administration themselves through a group called the Office of Disaster Assistance, or the ODA. And they're the ones who are actually processing all of these loans with the processing group that they have. Personal guarantees are required for these, so we've got to be aware of that. And the loan usage is really designed to be for operational expenses as a result of the economic injury of this COVID-19 disaster. There really isn't physical injury here. It's considered an economic injury. So we're looking at potentially payroll, and there's some caveats to that. General expenses, accounts payable, lines of credit. If you happen to have a bridge loan, you can cover that. returns of customer deposits for anybody who's in the tourism business and has had to return customer deposits of people who have canceled as a result of the shutdown. You can use the idle loan proceeds for that, but it cannot be used to pay down long-term debt, and people really need to know that. The Paycheck Protection Program, PPP, when applications for the PPP open up again, you should apply early. Funds will be limited, and keep repeating that. I'm going to share with you here as you see, but you've got to check with your lender if you've already applied. They don't want you to apply in multiple places, but they are going to cross-check it with your employer identification number, your EIN, to determine if people are trying to apply for this more than once. You can only apply for it one time. And so I want you to stick with one. If you are in the process already or had previously applied before the appropriation ran out, you want to follow up with your lender and be fairly assertive when you do that. They should be able to tell you where you're at. If you haven't applied and you want to apply, make an attempt to apply this go around. There's some new loan portals besides trying to find a bank who's willing to take you on. Intuit, Square, PayPal, and Cabbage are four of the ones that we've been told are now taking loans. I gave a test run on the Intuit one myself. It really seemed to be pretty slick and pretty easy, not hard to do. So I would recommend that people consider those. But obviously, if you are working with a bank and you know a banker, you want to stick with that and continue to pursue that, find out where you are in their queue so that you are high up on the priority and will get your application taken care of as quickly as possible. This program provides small business with funds to pay up to 8 weeks of payroll costs, including benefits and taxes, although not including federal taxes like FICA, Social Security, Medicare, and withholding for income tax. It does cover interest on mortgage obligations, but the interest only on mortgage obligations, rent on lease agreements, and utilities, but only for which agreements or contracts were initiated prior to February 15th. So those contracts had to be initiated prior to the disaster itself for them to be something that you could actually utilize the PPP program for. All of the portions or some portion of the loan amount will be forgiven if certain conditions are met. One of the things you should know is that if you do employ independent contractors on a 1099 basis, you cannot count them as employees of your business for the purposes of the loan. And the reason is that they can apply for their own PP loan. The loan amount should be equal to 2 months of your average historic monthly payroll costs from the last year, plus 25% of that amount, or 2.5 times the historic average, calculated average. So what that means is that you're going to want to produce and know what your payroll records are for the previous year, 2019, or this time period. They can make an adjustment if you are a seasonal business, and you have to work that out with the bank you're dealing with. And they're going to be asking for previous tax returns as part of the loan package. And so it's just one of those things that you want to be sure that you consider. One of the things that's important here is that you be honest and straightforward on all of these loan applications. 75% of this loan is the maximum used for payroll or should be used for payroll. 25% can be used for mortgage interest, rent, and utilities. Loan forgiveness is requested only from the lender servicing the loan. So when it comes time to seek this out, you're going to need to communicate with your lender relative to that. There are no prepayment penalties or fees on this, and no collateral or personal guarantee is required on this one. I think they're hoping that a lot of people do qualify for the loan forgiveness. So here's how you'll wind up owing on the loan. And that's if you decrease your FTE headcount, or you do not use 75% of the loan amount for payroll during the 8-week period following loan funding. What that means is that you actually have to utilize 75% of the loan amount for payroll during that 8-week period, whether you are open or not. And if you've got some questions on the opening versus not, I'll cover that in a minute. So you have until the end of that, or until June 30th, 2020, whichever is first, to restore your full-time employment and salary levels. In other words, you have to return to your pre-February 15th FTE level to earn the Paycheck Protection Program loan forgiveness. When you do apply for that, you're going to request documents that verify the headcount, the pay rates, and payments made for rent, utility, and mortgage interest costs that you may have used. And they're going to run the math on the calculations of this to determine the extent of loan forgiveness that you qualify for. So be very, very sure about what it is you're using it for. And again, as a repeat, during the 8-week period, which starts on the day that you get funded with the PPP, that 75% of that dollar amount has to show up in your payroll records over that 8-week period for you to be able to get the loan forgiveness. And you're going to be required to certify that these documents are true. You've got to be honest about it, because if you aren't, the government has said and made very clear to us that they are going to pursue those where the money is used for fraudulent purposes. If you do wind up owing on the loan, the interest rate is 1% and the term is 2 years. Payments are not required for the first 6 months. We've had a lot of people asking, well, why don't I just convert it to a loan? 1%, those are good terms. But keep in mind, if you get, say, $100,000, maybe it's less, maybe it's more, on the PPP based upon your particular circumstances, and you wind up not being able to get loan forgiveness on that because of the way in which you use those monies, what will happen is that 2 years from now, you're going to owe that $100,000 plus 1% compounded. So the reality is you want to make sure, based on your cash flow forecasting, which we're going to cover here shortly, that you want to be sure and do that and be able to do that is what I mean. So that's the 2 loan programs. There is another program that the SBA had included as part of the CARES Act, and this applies to all SBA-backed loans. And if you have one of these loans, you know who you are. So you're under the SBA 7A program, the 504 program, and the microloan programs, all of these that were in existence prior to February 15th. It does not apply to the EIDL loans, the PPP loans, or other disaster loans, such as those that are dealing with tornadoes in the Midwest. Those have their separate programs. The SBA is going to make payments on those loans, including the principal, interest, and fees, and those started on March 27th. So they're going to last for 6 months, and these are pretty automatic. And so if you're one of these people, you want to make sure that you are connected with your SBA lender who originally lent you the loan to verify that these payments are being made. You certainly don't want to make payments on these loans when you don't need to. I'm going to cover some other things here relative to independent contractors and sole proprietors in terms of what options that you have, since these are some of the questions that we've been getting over the last several weeks. The EIDL loan is one option that can be used to cover your payroll or personal owner income, but it may be too late to do that. The PPP is an option for independent contractors and sole proprietors, but you're going to need certain documentation, and I'll cover some of that here in a minute. Another option is the Washington Unemployment Program. CARES Act changes to Washington State ESD, which is actually also called the Pandemic Unemployment Assistance Program, or PUA. So first of all, who's an independent contractor from a federal perspective? As most people know, federal income tax and FICA, Social Security and Medicare, is due on all earned income. If you're a W-2 employee, this is done through deductions typically you receive on your paycheck. But if you receive 1099 statements from a business, you are an independent contractor to that business. Independent contractors should also have a Washington business license from the Washington Department of Revenue. So you should have both a UBI number and a federal employee identification number, employer identification number, called an EIN. So if you receive funds other than W-2 or 1099, you're somebody who's required to report that income to the IRS on a quarterly basis. And this is something that many people consider to be owner draws from a business. In Washington State, there are different forms of business entities. The most common are sole proprietor, general partnership, limited liability corporation, or limited liability company or corporation. From a federal perspective, an LLC can elect to file federal taxes as an S-corp. If you are a sole proprietor or an LLC, all profits, including owner draws, are taxable. Owners cannot receive W-2 wages. But in an S-corp, if you've been somebody who has filed as an S-corp, then the owner can receive W-2 wages. So for EIDL and who are Schedule C filers, under the guidance that we have, both the EIDL and the EIDL advance, which I'll cover in a minute, can be used to cover the net earnings of an independent contractor or sole proprietor. If you do that, you would not use the PPP to cover owner earnings. So payroll is something that can be covered by both the EIDL and the PPP, but you cannot use those two loans if you get them both to be used for the same purposes or the same expenses. You have to be very clear, and you have to separate that out, and you're going to have to separate that on your financial records. There was an EIDL advance, which is the first part of when you receive an EIDL, you get this EIDL, and they're converting this to an actual grant. It's up to $10,000, but it's based on $1,000 per employee. So when you apply for the EIDL grant, you identify the number of employees you have. You may have to be able to present, before signing for this loan, some documentation relative to your employees. And at that point in time, then you would be able to receive up to that $10,000 based on your employee count and have that portion converted to an actual grant. By the way, if you do that and you do take that EIDL advance, then the amount of your PPP that qualifies for loan forgiveness is going to be deducted by that portion. I just wanted you to be aware of that. The EIDL is a loan at 3.75%. The sole proprietors and independent contractors, though, from our advice perspective, have to decide if they want to borrow funds that they want to use to cover their own income. Typically, that's not a good idea. If you use EIDL loan proceeds for owner income, that will have an impact on usage of funds from the PPP, which I just said, and you may have to refinance the EIDL into the PPP if you wind up getting both. PPP and independent contractors, sole proprietors, limited liability companies who have elected to file as an S-corp and where the owners receive W-2 wages, those wages can be included in the payroll calculation for the PPP. If the business entity, your business, does not file as an S-corp, you want to look at your 2019 federal tax return, and I'll preface here, you need to get that done, even though you don't have to get it done until July 15th this year because of an extension, but relative to the purposes of these loans, it's highly, you're much more likely to be successful with these loans if you get that or have that 2019 tax return done. You're going to look at the Schedule C of that, line 31, which is the net profit. To calculate the loan amount that you would qualify for under the PPP as an independent contractor or a sole proprietor is, for your portion, is the amount on that Schedule C, line 31, divided by 12 and multiplied by 2.5. Then that's the amount you would apply for under your portion in the PPP. And then if you have employees on top of that, you would add in those W-2 wages. For businesses with multiple partners, owners, or employees or owners who make over $100,000 or who use the EIDL, as I was mentioning before, for payroll, there are additional details and impacts that you're going to have to follow up. And you can do that with one of our SBDC advisors or with the SBA at the 800 number I gave you, or if the PPP for the EIDL and the PPP with the lender that you're working with. Now let's talk about Washington unemployment as another option for independent contractors and sole proprietor. The Federal CARES Act has changed the state's unemployment system in 3 ways. Number 1, it expands benefits to self-employed. Number 2, it increases the weekly benefit by $600. above the state determined amount. And number 3, it extends benefits from 26 to 39 weeks. And so the CARES Act went live this last Sunday. I had several people that I know who applied. It was challenging, but they did manage to get through that. But there are some caveats that you need to know. To do this, though, you should go to the Washington esd.wa.gov and obtain an ESD. It's actually a Washington Secure account. And then there's an application checklist and even an eligibility tracker for you to consider, estimate your unemployment income. The actual process, though, and you want to know this, is that to qualify for Washington, the new federal portion I described earlier, the PUA, to qualify for that, you're going to want to be sure that you go on the site and get that done. You have to apply for the Washington portion, the normal Washington unemployment, then get denied before you can come back and apply for the PUA or the federal portion. For those employers who are concerned about whether or not the PPP applies to bringing back their employees, probably the most common question that we're getting right now is, my employees don't want to come back because they're getting so much money through this CARES Act portion, the PUA, Pandemic Unemployment Assistance Program, and I don't want to come back. And I certainly don't want to come back if I don't have work to do. But here's the problem with that. In order to be able to get the loan forgiveness, the business owner who applied for the PPP has to use that in the 8-week period following the date at which they get funded. If they don't, they won't get the loan forgiveness. And then if the business owner calls the employees back to work and they refuse to come back to work because they're getting more money on unemployment, then they lose the unemployment. In filing for unemployment, you have to file a weekly claim, and they're going to ask you 3 key questions. Are you willing and able to work? Have you sought work? And have you refused any work? And if employees lie on that because they want to stay on unemployment and not go back when the employer calls them back, then they are going to lose their unemployment. And if they lie and they get caught, they're going to have to repay all that unemployment money back. So it's important that people know that this program was not designed to be a windfall for employees. This program is actually, the PPP, is designed to be an employer-directed unemployment program and or utilized to the extent to which they can put those people to work. So with that, I'm going to move on to cash flow forecasting. Ron, are you with us today?
He hasn't joined us.
Okay, great. I'll go ahead and move on to this. I want to point out that the goal of the webinar is to reduce your company's overall cash flow, to preserve cash in the bank, and exchange your company's ability to survive. Your credit score may suffer, however, keep your eye on what's important, and that's preserving cash. And with this, I want to point out to everybody that this is the most important thing you can do. Getting the loans can certainly help and may be able to be something that really pushes you over. But there's a lot of details in these loans. The most important thing that you can do to protect your business and be prepared is to go through these kinds of steps to make sure that you're preserving cash. It's going to give you the best opportunity to come out of this okay. Both Ron Nielsen and myself are veterans of the last recession, where we had multiple people, business owners a day in our office, frequently distraught. And what we learned is that those people who, Ron has joined, good job. So I'm gonna actually turn this over to Ron. Ron, you can jump in and I will just move forward as you tell me.
Sure, Steve. Go ahead and finish your thought. What we saw during the recession.
Yeah. Is that a substantial number of businesses didn't survive. We think it was about 20%. But if you want to be one of those who does survive, as Ron is going to cover for you here shortly, you want to be one of those who understands your cash, does cash flow forecasting, pays attention to your operations, knows what's going on, gives yourself the best plan that you can have to move forward. Ron?
Thank you, Steve. Let's go to the next slide. So one of the things we addressed early on is what expenses can we reduce to begin to make a difference on the cash outflow of the company. So payroll typically is one of our biggest expenses for most of our businesses. And in this regard, unless you're participating in the payroll protection program currently or are hoping to participate in what we believe will be the next round of funding in this should it become available, you need to lay your staff off and really cut things back to the bare minimum. In fact, that first bullet point says maybe just you running the company for a while like it was back in the beginning. And that may be where you are right now, if you're even open at all. Next slide, please, Steve. So here's 12 steps that I broke down for you to think about that might help you in reducing your cash outflow. So step number one is to grab your profit and loss statement and to immediately look for ways that you can reduce your cash outflows. So triage your P&L and look at what expenses absolutely have to be paid and which ones could be let go for a while. And I'll get back to that in a moment. Again, we talked about reducing your payroll. Step number three is a critical one. You need to know what your cash balance is on a daily basis. So this is going to require you to reconcile your bookkeeping method to your bank account on a daily basis if you can. Now that's a lot of additional work, but you'll see the value of that as we get into our cash flow section here in a few more slides. Number four is to do an inventory management. Take a look at the inventory you have on hand and only order additional inventory for items that will turn quickly. Those things that are not turning quickly, I would suggest that you look at ways to discount those, to convert those to cash, because having cash inflow right now is going to be critical. Step number five is managing your accounts receivable. If you're not already doing it, I would suggest that you offer a 1 to 3% cash discount for prompt pays. And for those that are lagging a bit behind on the books, look at offering them a one-time lump sum discount, but if they pay it in full. You might also think about offering people the chance to make smaller payments than normal. Some cash inflow is better than no cash inflow. Negotiate with suppliers to see if there's any ability that you would have to reduce your payment or any discounts they could offer you as well. Step number 7, talk to your accountant about suspending your estimated tax payments. And I would do that immediately. Step number 8, also an immediate step, is to talk to your lender, if you haven't already done so, anybody that you owe money to, about getting a extension or outright loan deferral. Deferrals are simply where you skip your principal and interest payment for as long as possible. Typically with banks, it's 3 months. That would be a normal deferral. Bear in mind that by deferring the principal portion of the payment, you will be making a balloon payment on the last payment of the contract unless you work that out with your lender, which could lead you into a contract extension where you simply just add a few more months to the end of the contract. Step number 9 is the COVID-19 utility relief assistance that may be available to you. So contact your power company to see if they have any kind of relief system that they're offering to the business community at this time. Step number 10, contact the Washington State Department of Revenue and the Internal Revenue Service to see what kind of assistance they could provide to you in making tax payments. Step number 11 is to check and see if you have the business interruption continuity insurance. I've been told by several businesses that some of their insurance companies have an exclusion for viruses, but it's still worth the phone call to find out if you have that. And step number 12, oftentimes during these downturns, there's new market opportunities that may be presenting themselves if we change our business model a little bit. So take a look at those, especially as things begin to open back up, which we're hoping will happen here after May 4th. But whether it's a partial reopening or if it is a complete reopening, take a look at new ways you might be able to meet the new environment, the new needs. Certainly the social distancing for some people will be going on for some time. So until there's a vaccine created for this virus, there's likely to be some new standards and new rules out in the marketplace. So look to see if there's something you can do to meet that need. Step number 13 now takes us to our cash flow. Now we're going to bring it all together and take a look and see if this is going to work. So why do we do a cash flow? Well, it's to help us understand the timing of all inflows and outflows of money in our bank accounts. Next slide. So cash flow is the movement of all money in and out of our bank accounts. Positive cash flow is when more is flowing in than out. Negative is when more is flowing out than in. Recessions cause negative cash flows. When your income drops, you must immediately reduce expenses, inventory purchases, if you can, rent and lease payments, and supplier and loan payments. Next slide. Cash flow projections will help you determine when and if you will need more money. It will show you how much is needed, or can I make additional cuts. Cash flow projections done properly empower you to make better decisions. Next slide. Let's start with some basic accounting terminology. There's two different kinds of primary reporting on the profit and loss statement. We have the accrual rules of accounting and we have the cash rules. So we're going to talk about the accrual rules here first. Accrual simply means you enter your sales into your accounting system when the sale is earned, not necessarily when you've been paid. This process involves a balance sheet account called accounts receivable. Likewise, you enter expenses when they're incurred, meaning you receive the bill, so you enter it into your system, but you haven't paid it yet. So this involves another balance sheet account called accounts payable. Both receivables and payables help you understand what is owed to you and what you owe. These are called current accounts, meaning what will come in the next 12, come in and go out in the next 12 months or less. Thank you, Steve. Next slide. The cash rules of accounting are quite a bit simpler. You enter income when you receive it. You enter expenses when it's paid. For cash flow forecasting, I recommend using the cash rules of accounting. I want to know how much cash is going into and out of my bank account. For overall fiscal management, you and your accountant will decide which method best fits your business model. Next slide. So let's talk about the two primary methods of portraying statements of cash flow. There's the direct method or the indirect method. The direct method of cash flow forecasting tracks all cash in and cash out on your accounts, on your profit and loss, and on the balance sheet. The indirect method uses the accrual net profit from the profit and loss statement, then adds or subtracts from that total with changes in the account balances on the balance sheet. Most statements of cash flow use this method. Both work and should arrive at the same conclusion. For my example, I'll be using the direct method of cash flow forecasting. So why do we complete a cash flow projection? This will show us if we have a cash shortfall, when that will occur, do we need additional cuts, or how much additional cash is needed to cover that shortfall. Your projection will drive your loan request should you feel the need for an outside source of financing. Track your cash flow on a daily basis during the recession. And to help you with this, the Small Business Development Center provides free confidential business advising, and we do that across the state. And here's a link to find an SBDC advisor near you. Next slide. This is a slide that shows you what I call decision-relevant direct method of cash flow would look like. And let's break this down now. So let's go to the next slide. And I'll show you what this looks like on a more granular level. So this looks a lot like a checkbook for those of you that used to use checkbooks or may still do. We have a beginning cash balance. We have inflows from the income statement on the profit and loss. Then we have other cash inflows that's not part of the profit and loss statement, like owner investments, term loan proceeds, or owner personal loans to the company. Ultimately, when we take the sales from the profit and loss statement and add it to the other inflow, we have total cash available. Next slide. Now let's take a look at some of the outflows. This is a representation of some typical outflows you might see on a profit and loss statement. We have cost of goods sold and several line item expenses. Next slide. Now we'll take a look at some of the other cash outflows that's not part of the profit and loss statement, such as owner draws. We have term loan principal payments, and we have inventory purchases along with vehicle purchases and others. Now, some people might ask, well, why is owner draws here? Well, the IRS defines owner draws as a discretionary use of profits from the bottom line, the profit line of the company, meaning that it's below all the expense items, and this is just a use of the profits by the owner. So that is not considered a business expense, but it is an outflow of cash out of the bank account, so we do have to track it, and that's why you find it here. So again, when we take the operational expenses and add them to the other cash outflow, we have our total cash outflow combining both the profit and loss and the balance sheet. And then the very bottom line is our ending cash position, is when we take the total inflow and subtract the total outflow, and that's our ending cash position. That typically will become the beginning cash balance for the next day or the next week or the next month, depending on how we're tracking the statement of cash flow. Next slide, please, Steve. Okay, so let's put this all together with some numbers. So the first column here under normal represents what this business, hypothetical business, might look like prior to COVID-19. So we're showing $19,000 of sales coming in. The middle column is with COVID-19 hitting. You can see that the income dropped from 19,000 down to 1,500, and for some of us, we'd be lucky to even get that. But for this example, I'm showing 1,500. And then the far right-hand column is a COVID-19, what I'm going to call managed statement of cash flow. It's still the same lower amount of cash coming in. And the total cash available, again, 19,000 on the normal, only 1,500 available for the COVID-19 unmanaged and COVID-19 managed, the far right-hand column. Next slide, please, Jim, or Steve. Thanks. So now we have the profit and loss expense area here. You can see the normal would have been $13,364 going out. COVID-19 unmanaged is just a little bit less, and the only difference between the normal and the COVID-19 unmanaged is in the merchant fees. You can see it normally would have been $418 based upon that higher volume of sales, that only dropping down to $33 with only $1,500 coming in. And then in the far right-hand column, you can see the COVID managed cash outflow from the expense items here. Several items aren't being paid. And that was just a decision that we had to make to get the cash outflow so we're almost to break even with the cash inflow. Now, several of these items you're not going to be able to skip every month, but you do need to contact the people you owe money to and let them know what you're planning on doing. And I oftentimes recommend that you do an alternating system where you pay some one month and pay some the next month, just so you have an inflow of money coming into them. Next slide, please. So let's look at the bottom line here of what happens. So the total expenses in the normal is 13,364 and change. And then the far right, the managed cash flow statement is showing total expenses of only 433 going out. Now, the next area here is the other cash adjustments from the owner draws. Now, normally this owner would take out $4,500 a month. And you can see that in the managed statement, I'm only having them take out $1,000. And actually, you can only take out what you have coming in from the positive cash flow, if any. For many of us during this time frame, there may not be any amount there, so we might not be taking any home for a brief period of time. So the results of all this, total cash outflow, you can see that we have a total cash outflow of $17,864 compared to $1,433. And then the ending cash position for a normal month would have been a positive cash flow of $1,135. An unmanaged COVID-19 ending cash flow would be a loss of almost $16,000. And then in the managed statement on the far right-hand column, we only have $67. Our goal here is to at least get it to break even. If we have a little bit of positive cash flow, that's great, but our goal is to keep it at break even if we can. Now on the P&L, here's the impacts of what we have. In a normal month, they would have made $5,600. An unmanaged profit and loss statement would show a loss of $11,479. And on our managed profit and loss statement, we're showing a profit of $1,067. Now, the difference between the ending cash of $67 in that column and the $1,067 is the owner's draw. So if we subtract the $1,000 from the $1,067, that leaves us our ending cash of $67. Next slide. In doing these adjustments, it's very important that you communicate with the people you owe about what you're trying to do. And there's a couple things that's really important here. Don't commit more than you believe you can do. People are going to try and talk you into paying the whole balance or getting you to pay more to them than others. But give them your plan of what you plan to do and then follow that and try and live up to what you told them you plan to do. Be aware that you'll need to catch up with whatever the amount is that's lapsing. So plan for that and plan to do that as soon as you can once things begin to return more towards normal. Next slide. So for more information on our cash flow forecasting webinars, you can go to this information here. And in doing this, we've been making a transition over the last several cash flow presentations, moving more and more towards the how-to of what needs to be done. So not only the steps to reduce the cash outflow from the profit and loss statement and balance sheet, but also how to do a statement of cash flow. So for more information on that, you can go to our website, and you can see the webinars we're going to be doing as we begin to unravel more and more of this process to you as time goes on. It's important that you not delay in taking the steps we just talked about. Reduce those operational expenses, reduce the expenses from the balance sheet as quickly as you can. Preserving cash in your bank account is what's going to help you stay the course throughout this downturn. Don't delay taking control of cash management. Really, one of the best ways you can take control is by taking these steps and doing a cash flow forecast, and that will really empower you to have a better idea of what's about to happen. And with some folks from the recession years ago, we were doing daily cash flow projections because money was that tight, and it was that crucial for us to understand what was coming in and what was going out. Steve?
Thanks, Ron. This last slide identifies who you can contact on the topics that Ron was just talking about. We've got 25 centers located around the state and 30 business advisors. We are actually in the process, we hope to be hiring a business advisor in the Cle Elum and trying to remember the communities. And the Kittitas County area, and hopefully we'll be bringing somebody on here shortly relative to that. So we're looking forward to it, but this is where we're located, and this website URL here is where you can actually locate an advisor near you and get that additional information. So we've got a limited number of participants on. What I'd like to do, no need for you to go to the chat, but at least so you don't try and talk over each other. If you do, we certainly, Ron and I will stay on for a few minutes and answer any questions that you might have. Amy, did you have any other questions or comments you'd like to add?
You know, I don't think so, Stephen. You and Ron were very thorough in the slides, and we appreciate that information. I hope those that came on and those that are going to listen a little bit later through the recording, if they have any information, the Chamber's happy to pass those on to an advisor. But like you had mentioned in your last slide, there is an advisor that is close within us, our area for now. And I really appreciate the thorough presentation for sure.
Thanks, Amy. Ron and I tried to cover the things that are important. One of the things that I really just want to continue to reemphasize and why we add it to this webinar is that cash flow forecasting and putting together a plan, as I often say, a person without a plan always gets managed by other people who have one, such as your vendors, your customers, your bankers, anybody that you may owe money to or be dealing with. Everybody's got a plan for your money, and if you don't have one, you're more likely to lose out. So putting together a plan that's realistic, maybe including multiple scenarios, this is really the first thing that businesses should be doing today, and not just relying on a crisis loan to save them. They certainly can help, and they may make the difference. But if you're not following these steps in terms of developing a true cash plan, you're a lot more likely to not be one of those who survives this. So with that, if there aren't any other questions, I'll give it just another minute. We'll go ahead and end the webinar, and we just want to say thank you very much for the opportunity, and hopefully people will reach out to us at some point in time here in the future. So, all right, with that, I'll say thanks again, and I'll go ahead and we'll leave the meeting. Take care, everybody.
Thank you very much.
Thank you.
Thank you.